Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, so doing a little follow-up on the correlations video from yesterday. If you haven't seen it, I suggest checking it out. Lots of info in there. But we noticed there's changes in these correlation from day to day. So we were watching oil and SPY very closely. And let's compare again here on the 5-minute chart. And we can see the oil correlation here. The first candlestick, let's get going here at 9:30. So here's our first candlestick. It's green. Next 3 candlesticks, red pullback, bullish reversal hammer. 3 candlesticks, pullback, bullish reversal hammer. Big move to the upside, 20 big green candlesticks. 20 green candlesticks, they're not big green candlesticks. Right here is where I started to notice and point out live on webcam that the correlation between oil and the markets were greatly favoring the bulls. Every little bullish uptick in oil, the market responded significantly, and every bearish downtick, the market hardly responded. So look at this 4 candlestick bull move, 4 candlestick bull move. We have 2 candlesticks of pullback, just 1 of pullback. We don't even break the low of the previous 5-minute candlestick, where here on oil, we pulled back and took away half of the gain. So if we were seeing a direct correlation, we would have seen a pullback here, giving back half of this 4 candlestick gains all the way down here to the 200 period moving average support. We did not see that, so that's when we know the bulls are favored. We had the bullish reaction to the inventory report, big spike to the upside, SPY hitting the high of the day, followed by a fake out on oil and an absolute dump for 20 minutes. Look at the dump for 20 minutes in oil. Hand in hand, or with SPY I should say, hand in hand. But oil broke the low of the day. SPY didn't even get back half of those gains. So there's another example where the bulls are favored because this bearish downside is not correlating strongly. It's almost as if the bulls are correlated stronger than oil and the bears are correlated a lot weaker. So we saw this pattern play out consistently. You can see just visually bouncing around occurring, and then that big dump occurred. This was a bearish reversal head and shoulders pattern on the 5-minute of SPY, shoulder, head, shoulder. We didn't even need to draw the neckline. This 200 period 5-minute support was doing it for us. We fell through it and dumped. That's when oil had hit a new low of the day. So very strong correlations with oil and the market. Again, and I've been highlighting another correlation between the miners, the junior miners acting more bullish than the senior miners. So let's take a look at that here and compare the two on the 5-minute chart. So actually, let's get a setup on the daily chart. The differences between these two are more clear than they've been in months. So NUGT, let's work on typing. NUGT yesterday broke the low of Monday. So a lower high and a lower low. JNUG did not. JNUG is still in a tightening pattern. Higher lows, lower highs. So that's one clear difference. And then we go into today on the 5-minute charts and look at it a little bit closer. Let's see NUGT. So a big bull move. New low of the day was hit at 10:55 a.m., breaking the low of the day. Look at JNUG. Bulls formed a higher low at 10:55 a.m. and the new low of the day occurred at 11:50. So for 55 minutes, the bulls held on stronger and longer than the NUGT bulls did. So just another correlation with miners, the junior miners, certainly more bullish than the bearish miners, or excuse me, the senior miners. And if you are playing miners bullish, you're playing JNUG, and if you're playing miners bearish, you're playing dust. I keep saying it time and time again. Can't say it enough. If you're playing miners, that's the way you want to be looking. So correlation between oil and the markets is still very strong. SPY came down to an extremely important support level at 212.50, a double bottom with the low of yesterday and the low of today. Oil is in oversold conditions, 20 on the hourly chart, so we're expecting some bounce overnight, and I'll do an individual oil video and an individual SPY video to compare those together. But the correlations today, let's touch on the dollar. That was big yesterday. So a big pullback in the dollar led to some upside in the commodities. Gold saw some little bit of upside, and we saw oil was doing its own thing today because of the inventory report. Whenever that inventory report comes out and the volatility spikes on oil, those correlations certainly shift around and change. but you're only noticing these minute differences if you're watching all of these charts in comparison to each other. And again, that's why traders have so many screens up to see how these charts are reacting. And we will see if the dollar maintains strength. I'm watching dollar on the daily, and we're still in this tightening pattern, and we actually did break out of it yesterday very slightly. That's where I had my line, but now because we're back within it, I adjust my downtrend line just a little bit to make it fit that perfectly, just because that was clearly not a breakout from this pattern. So we're still looking for this pattern to tighten. We could definitely see a pullback here on the dollar all the way down to 94.50 and still be within the uptrend line. So keeping that on watch and seeing if we get any bearish follow through on the dollar tomorrow, which should help commodities, gold, silver, and the oil. So I appreciate you watching. Hopefully there's some nuggets of information in here, but again, practice this yourself. Pull up these charts and compare them. Point out when you notice key differences. A difference I noticed today on JNUG, wasn't planning on talking about this, but so JNUG hit the high of the day at 10:15 a.m. and then pulled back. We know JNUG is trading based off of gold and the markets because it's gold miners. SPY hit the high of the day at 10:35, so 20 minutes later, SPY was higher. And I want to look at gold on the 5 minutes, setting it up real quick. Bear with me. High of gold was at 10:30, and I'll show you that real quick. So here's the high of gold up here, 10:30 a.m. So the fact that JNUG, the junior miners, hit the high of the day at 10:15, and then at 10:30 gold's at the high of the day, and at 10:35 the market's at the high of the day, the fact that JNUG did not hit a new high of the day at that point, here's 10:15, then we get to 10:30, and we're seeing a lower high fairly significantly. So that absolutely stood out to me, and I'm saying to myself, if the market and gold is hitting a higher high, why is JNUG unable to do that? And you can see the bears took over for the rest of the day. So that was just a little indication, a little heads up that something was a little off, that correlation between gold, oil, or make that gold, the market, and the miners, something was a little off. And it didn't, all things considered, if the correlation were direct, we would have seen JNUG hit a new high of the day above 2024 at the same time that gold and markets were hitting a high of the day together. So it was very odd that that was not occurring, and it was a little heads up that you could utilize in your trading plan. So I appreciate you watching. Have a wonderful night.